Hey, Bulls and Bears, we are back with another dose of economic reality. Thank you for joining in. Today is Saturday, February 18th, 2023. I apologize, I did not get a video out yesterday, but we're back, and thank you for coming back to the channel. We've got a lot of financial economic news to get caught up on here as usual. The title of this here, America's Credit Card Just Got Declined. That's an article out of Porter and Company, and it's about a lot of the things we talk about here. Basically underpins a lot of things we talk about here on this channel, a lot of the subject matter. The US economy runs on credit. When America's credit engine sputters, so does the economy. And I think we all know what's the flip side of credit. Well, it's debt. So banks issue credit, you have a credit limit on your credit card, and consumers, people take on debt, and that creates the economic growth. So in other words, if banks were to stop lending, if debt were to stop increasing, the entire house of cards basically comes crashing down. And you're talking about Mad Max, you're talking about financial crisis, and the U.S. hasn't even seen a glimpse of the potential of a financial crisis or how devastating it can be. 2008 was just a warm-up. Look at countries like Lebanon. There's people out there, Beirut actually, burning banks, and not just one. And it's pretty widespread here. There's Arabnews.com. Beirut banks set alight as anger over economic collapse deepens. So these people that are living off of credit in a lot of these different countries, once the banks stop issuing the credit or once the banks close down because of bank runs, the banks get the blame. Well, it was all the banks and the lending in the first place that created the economic boom that gave people the false illusion of economic security or economic strength. But then when the debt stops, when the credit slash debt stops, then the banks get the blame for stopping the credit. It's crazy how people don't really see this coming. But when it happens, the banks get the blame. You need to let me borrow more money, or you need to let me get my money out of the bank. Well, technically, it's not your money. Once you sign it over to the bank, if you read the fine print, it then belongs to the bank. It's no longer your money. If you don't believe me, go look at the fine print, and also go look at the bailout provisions, or the bail-in provisions. I'm sorry, the bail-in provisions through Dodd-Frank, and also go check the leaked video from that FDIC meeting where the FDIC is openly discussing how people are going to get their money taken from them. So it's not a secret anymore. Anyone that doesn't know this, needs to do a little bit of a deeper research here. We've covered it on this channel. We showed you the videos. We told you line by line what they said, and other channels also reporting on it. So it's not a secret anymore. Out of Bloomberg here, the Fed cannot reach 2% inflation without crushing the economy. That's L. Arian. He said that. He's an economist. Basically, the 2% inflation target, it is a false target. So it's kind of a scam, basically. So even if you got inflation to 0%, meaning prices stay right where they're at, the cost of living does not go up, does not go down. If you got it to 0%, that means no more rising prices. Still, that would not be enough, as most U.S. consumers, not only can they not handle higher prices going down the road, and you would think that zero growth would fix that. Well, not only can they not handle higher prices, most U.S. consumers, U.S. people, cannot even handle the current debt that they already have without taking on any additional debt. Most people cannot handle the current debt. That's why every month we see more and more people not paying off their credit cards in full. And we'll look at it next month. It'll get worse. It'll get worse. It'll get worse. But then people will email me and message me saying, you're wrong. I went out shopping today, and tons of people waiting in line at the restaurants, at the stores, tons of people shopping. The streets were packed. You couldn't find a place to park. I actually saw that here in San Diego. We did a little out and about time, a little shopping. Didn't really buy much, but just got out of the house. Went down to Old Town San Diego, went to Grossmont Shopping Center here in La Mesa. Also went to Pacific Beach, walked around, checked out some of the stores. And just by looking around, you would think that no one has any debt, because you see just people just in line shopping, buying expensive items. I couldn't believe some of the prices that they were charging at some of these stores. We went to this store that sells little knickknacks and plants and little gifts and stuff like that. Tiny little plants, like this big. $14, $15, $16. Wow, just couldn't believe the prices. Anyways, all right, let's get on to the next topic here. The housing market has cooled so much that even deep-pocketed investors are backing off. Fourth quarter 2022 numbers are out. The big money is backing away, not completely, but compared to the previous quarter and the previous year, big money and big investors are pulling back on purchases of these homes. So I think the smart investors right now are taking a wait and see approach, because do you want to be buying a home at today's prices knowing that you're going to have pretty high rents in order to cover that cost of carrying that, even if you're paying cash for a home? Just the cost of living right now, the cost of maintaining a property right now. I was talking to one of my clients at my job, and a roof redo, or a new roof, replacing the roof, was close to $30,000. This was only like a 1,700 square foot home, and I'm not completely up to date on the price of roofs and materials costs. It's not not completely my category here, but that seems quite a lot, almost $30,000 for a 1,700 square foot home roof. It wasn't one of those tile roofs here like you see in California. Just your standard composition shingle roof, right? So maybe they need to go out and get more bids. Maybe they need to shop more. But it's hard to find contractors and roofers now. And on the same topic, I've talked to people here that had to wait months to get their roof even looked at by some of these roofing companies, right? So we need more roofing companies, more people actually willing to do work like roofing, and less people in the service sector. But that's where most of the jobs are at right now. The service sector, fast food jobs, servers, delivery drivers, cashiers, things like that. So yes, that is an article out of Fortune if you want to go check that out. That pretty much paints the blueprint of what's happening right now in the housing market. That's why we see sales plunging, but prices haven't really dropped that considerably, considering the slowdown in sales in the housing market, right? So it's really interesting times right now, especially in the housing market. Let's go over here to another Bloomberg article. The Fed, the hawks, see possible case for returning to larger rate hikes. So we see the rate increases out of the Fed funds rate. The last one was much smaller than the previous ones. Remember, we saw ones that were 0.75, 0.75. Now they're talking about, because inflation ticked back up last month, we're talking about that CPI number that was higher than expected. Well, all of us here expected it to be higher, and we know that inflation's not getting better. But this new evidence now, the CPI print now has at least some people at the Fed talking about the need to go back up to higher rate hikes, maybe 0.5%, maybe 0.75, maybe even a full percentage point. Not that that's really going to help the cost of living. It will help deflate some of these bubbles more quickly, but it's not going to be the magic formula. It's not going to be the silver bullet that stops the werewolf of rising prices. That's for sure. Financial Times: U.S. retail sales slump in latest sign Federal Reserve may need to keep rates high. Let's go over to another article here. This is out of Liberty Street Economics. Younger borrowers are struggling with credit card and auto loan payment. No surprise there. We know that the younger crowd, the younger crew, is in the toughest time financially. I mean, you just get out of school and you have all this debt. In most cases, you have college loan debt, and the cost of living is just outrageous. The house prices and the rents both. I mean, rents have come down a little bit, but not really a scratch or a dent in the amount of increase that we saw over the past few years. Rising U.S. interest rates push countries into global south. Rising U.S. interest rates push countries in the global south towards economic collapse. A lot of countries, their economy is based on the strength or weakness of the dollar. So when the dollar strengthens, like we saw over the past few months, now more recently it's weakened, but over the past 6 months, for the most part, it's strengthened. And a lot of these countries' currencies have been devalued so much because of the rising strength of the dollar that their economies are basically collapsing. Now, the dollar has weakened significantly here recently in the past few weeks. So hopefully we'll see some of this reverse in some of these other countries. But here's the line out of here. Soaring inflation and devalued currencies have created a catastrophic debt crisis for much of the world, including countries like Lebanon, Iraq, Egypt, Sri Lanka, Pakistan. And it's interesting, a lot of these countries are looking to go outside of the dollar for trade with countries like Russia and China, the BRICS nations, Brazil, India, South Africa. So it's going to be very interesting now that the dollar strength has reversed to see when this stops and if this is going to be the drop in the dollar to end all other drops or to end the dollar dominance across the world. It's going to be very interesting going forward here on that. Wall Street Journal, more auto payments are late, exposing cracks in consumer credit. And this Wall Street Journal article shows this chart of the different tiers of borrowers. And the lowest tier is the subprime 300 to 529 credit score. Wow, 300 credit score. If you've got a 300 something credit score and you're still getting a car loan, that's something interesting about that bank we'd have to look into there. But that is over that tier from 300 to 529 credit score. What's considered super subprime is about 23%. So almost 1 in every 4 vehicles in that tier is delinquent on their car loans. Now, if you look at the top, the best credit rating from 620 to 659, of course, credit scores go higher than that, but that's as high as this tracker goes. That's right around 5%, and that's up from about 2.5% in 2021. So in just over a year, it about doubled from 2.5% to 5% for the best borrowers. Well, actually, what this chart looks at, it's subprime, right? So the best of subprime. And that's the reason why it doesn't go above 659, because that's considered prime credit score. But the best of the subprime, or the highest credit score in subprime, is almost 5%, and that's up from 2.5% just over a year and a half ago. But the worst, the 300 to the 529 credit score, 25% default rate. What are these banks thinking giving out car loans to people that have a 300 something credit score? Wow. I mean, yes, they're going to charge a high interest rate, probably 25% or around there, and they're going to make some money as long as the borrowers pay. But how long are these borrowers with that big of a high of an interest rate, at a 25% interest rate at today's prices for vehicles? It's just a matter of time before these people are going to default. So what do these banks know? Why would they be making such reckless loans? Do they know there's going to be a bailout, or do the CEOs make so much money in just that short amount of time the CEO doesn't care if the company goes out of business because they're walking away with the golden parachute anyways, right? So when you see a CEO making 10, 15 million a year, at the end of the day, once they have so much money that they can live the rest of their life comfortably, do they even care if their bank goes bankrupt? Interesting topic there. Debt limit forecast says U.S. could be in default by summer. Now, it's interesting because this debt ceiling debate, the debt limit always gets increased. But sometimes there's been several months where there was a pause or delay or a temporary shutdown. And even during a temporary shutdown, some services get shut off. Some federal employees don't get paid. For example, here's a flashback. I remember actually reporting on this at the time. Back in 2019, there was a debt ceiling impasse and a partial shutdown, a temporary shutdown. Of course, the credit limit got increased ultimately, but here's just a headline for those that don't remember what happened. Hundreds of federal workers hit by shutdown turn to GoFundMe. More than 700 accounts have been created on fundraising site GoFundMe related to the shutdown, and many of these were federal and state workers that didn't see paychecks during that time. Another headline here, governmentexec.com, the debt ceiling could hurt Fed's paychecks. The shutdown makes me nervous. Federal paychecks in the crosshairs. Shutdown drives federal employees to GoFundMe. Just search some of those headlines if you don't believe me. So will it be a temporary shutdown again? And how long is temporary? Is it several months? Is it 6 months? Because now you see, one of these political parties saying we're spending too much. But it's interesting, back when that particular party was, kind of running things, or the dominant party, they didn't care about the debt ceiling then. It's only when the opposing party gets elected that they start caring about the debt limit, the debt ceiling, right? So this whole left versus right thing is a scam. They all spend money. This whole system, this whole economy is based on never-ending amounts of debt, aka credit, and getting someone else in office is not going to fix this. So keep preparing, folks. Keep stacking. Get ready for things to hit the fan. It could happen suddenly with something in the system breaks, and you see banks go dark, like we're seeing in some of these other countries right now, going through economic collapse. To think that the dollar is always going to be there, and to think that the U.S. is immune to these types of things just because we have the dollar, the world reserve currency, well, that is changing. It's just a matter of when. It's not if, but when. And these things can play out very slowly. That's why I've called this a slow motion economic collapse. But it's the slowness of this collapse that puts people into a complacent state where they just think the U.S. is forever immune to any sort of a major economic downturn. Well, if you look around, most people are already feeling the effects of the downturn. They just haven't realized it. Even people that I talk to that tell me that I'm wrong, that saying the economy's strong, when you talk to them about their personal financial situation, a lot of them are in dire straits. Their debt is unpayable, but yet they still think that that's somehow normal because everybody else they know is also in the same boat. Just because everybody else is in the same boat doesn't mean that the boat's not going down, right? So on the Titanic, just because everyone else is going down, does that mean it's okay? No, you're still going down, and you're still gonna, be in that icy water. And just because everyone else is in there with you doesn't make it less cold, right? I don't know what other analogy I can do to best sum it up besides that, folks. Let me know down in the comments what you would call this slow motion economic collapse. Anyways, hope everyone's doing good. We're going to be ahead of the game. We're going to be okay because we're going to be stacking and prepared for this. Have some food, have emergency preparations, have some money out of the system. But at the same time, look for investment opportunities. From time to time, I'll let you know what I'm invested in here. I continue to stack silver pretty much every month, at least a few ounces to add to the collection, because at the end of the day, this monetary system is going to be gone, and it's going to be replaced with something. And I think it's going to be metal backed when you look at what the rest of the world is doing. All right. There's a few people out there that have other agendas, a few elites, but at the end of the day, this is what it's going to be. So how long it's going to take to get there, that's the question. So be safe, people. Keep stacking. Be careful out there. Crime is rising. We're going to talk about that in our next report because this is kind of a long video. So please stay tuned. Subscribe if you'd like to support this channel. So thank you for keeping this channel alive by hitting that like button, and to help even more by subscribing and leaving a comment if you would. Thanks, everybody. Big love. Keep stacking. Bye for now.